Who's been the greatest influence on your career?
The key influences on us is the traditional one, Warren Buffett. Warren Buffett's focus on buying quality businesses has been instrumental in terms of how we build out our portfolios. We're focused on those companies which have got good barriers to entry, strong ability to maintain earnings through a cycle. The other one is Peter Lynch, and in particular when we're building out our portfolios, we like his saying about watering the flowers and cutting the weeds, because you want to get out those problem stocks out of your portfolio quickly and allow the good quality companies to continue to grow, continue to reinvest your capital.
What have been the biggest changes to your business since you started managing money?
The biggest change really came at our inception, because we were at the forefront of separately managed accounts within Australia, and what we really wanted to bring to the market was that idea that very wealthy individuals have had for many years in that private banking type experience, where they get to see what it is that they owned, they've got the underlying ownership under their control, and it's really that independent management of those assets on behalf of those clients. And that's been a transition within the Australian market, and we've seen that continue to grow, particularly through the GFC, as more interest is coming into that market.
What are clients looking for in these volatile times?
We think the key thing is that transparency. They like to know what it is they're investing in and understand what it is they're investing in. So for us, quality stocks, but also explaining the key decision making behind our decisions, and via email and other written communications, that really helps the advisor and the clients really understand what is going on in the decision-making process, and builds up that trust with the client.
What type of mandates do you offer and why?
We offer a range of mandates. Across Aussie equities, we offer three main mandates. The first one is a high conviction core mandate, and what that's focused on is really suitable for a range of clients, but it's focused on both yield and capital growth. The income portfolio is much more focused on the yield component. It's focused on buying stocks which offer sustainable growing dividend yields, and it's particularly suitable for clients in a pension phase or low income taxpayers who can really take advantage of the franking credits that are on offer. The SRI portfolio, which is our third portfolio, it's an ethical portfolio. It's particularly suitable for charitable clients or charitable foundations or church groups, and it's really focused on those clients who have ethical concerns around their investing. And in particular, it has a slightly more focus on smaller cap stocks. And the final portfolio is a property trust portfolio. And the property trust portfolio is seen as accompanying a broader portfolio for a client, a balanced type portfolio or a conservative or a growth portfolio where they're looking for a property trust allocation.
How can you best support planners in understanding SMAs?
We have a dedicated BDM attached to our business who focuses on supporting planners on the road, be it seminars, one-on-one meetings, potentially meetings with clients if planners want that help. And we really focus on the educational process, not just around Dalton Nicol Reid, but around the SMAs in general. And in addition, I think once we have a client, we also focus on the written communication with the financial planner to ensure that they've got a good understanding of what's going on within our portfolios, so that when they're involved in the communication with their clients, they're well informed around that process.